We tend to view local elections, school bonds, and property taxes as basic, everyday tools for building a better community. You vote, you pay your share, and in return, you get better schools and paved roads. But underneath that familiar routine lies a financial structure that is mathematically unsustainable. It's a mechanism quietly draining hundreds of thousands of dollars from the average family. These local civic duties function as a highly efficient, legally sanctioned loop for wealth extraction. Take a look at Salina Independent School District in Texas, where voters allegedly just approved over $2.3 billion in new school bonds. When you break that massive number down, it equates to roughly $243,000 in newly minted debt strapped to every single household in the district. This chart compares two variables: towering new debt obligations stacking up against a completely flat median household income. The math simply does not work. There is no feasible way for these communities to ever pay this back. This scale of unpayable debt serves as the primary output of a sophisticated system hiding right in front of us. Securing the billion-dollar bond approvals required to sustain this engine presents a problem. Most communities would never voluntarily vote for this level of debt. Installing officials willing to approve these hyperinflated packages allegedly requires a hidden mechanism: compromised voting software. But in specific certified vote records, hidden algorithms take over as the day progresses, and that flip rate violently spikes to a 65% synchronicity. In statistics, a 12 standard deviation move from raw data is impossible to achieve by chance. It is mathematical proof that the software is actively engineering the count to predetermine the winner. With the right people securely installed on school boards and city councils, the financial drain mechanism kicks into high gear right at the local property level. Central appraisal districts pull tens of thousands of properties out of their standard databases, artificially inflate their values in hidden spreadsheets, and quietly insert them back into the system. By artificially pumping up your home's assessed value, they force you to pay exorbitant property taxes. That extra cash is desperately needed to cover the staggering interest payments on those multi-billion-dollar school bonds. These record-high tax payments bypass local classroom improvements entirely, flowing directly to service an unpayable debt balloon engineered from the start. None of that newly raised bond money is actually reaching the students. It flows directly upward, servicing debt held by the centralized financial sector. This is a classic textbook example of corporate socialism. It is a structure designed by central banking institutions to socialize massive financial losses while actively extracting equity from everyday citizens. The ultimate victim of this multi-tiered mechanism is the middle-class homeowner. With every manipulated tax hike, the equity you've built up in your home is silently siphoned away to feed the machine. Algorithmic voting manipulation ensures the debt gets passed, inflated property appraisals fund the interest, and the banks collect the revenue. It operates perfectly as a single closed-loop extraction engine. When you scale this unpayable debt cycle up to the macroeconomic level, the illusion of safety surrounding traditional retirement nets completely dissolves. Because the underlying local and state debts are mathematically impossible to settle, the massive state pensions and 401k plans reliant on that system are quietly being hollowed out from the inside. Current mathematical projections indicate that as citizens attempt to cash out these compromised retirement funds, they will likely be worth only 30 to 40 cents on the dollar. Even liquid cash sitting in a standard savings account isn't shielded. Modern legal bail-in provisions give banking institutions the right to seize your cash deposits and hand you back worthless shares in a bankrupt bank. Placing your faith in digital fiat, over-leveraged banks, and government promises within this rigged loop is a mathematical guarantee of financial ruin. In an environment where the dollar is rapidly losing its purchasing power, sitting perfectly still and hoping for the best is the most dangerous financial decision a family can make. To protect what you've earned, you must detach your wealth from the compromised digital loop. You do that by moving into a tangible safe haven, transferring your wealth into decentralized physical precious metals like gold. Unlike digital digits on a screen, physical silver and gold exist entirely outside the reach of manipulated tax appraisals, algorithmic voting software, and bank bail-ins. When the underlying math of the systemic debt finally catches up with reality, holding physical assets is the only logical way to ensure your family's future remains intact.